Hi guys, what's up? It's me, Rowena. So for today's vlog, I'm gonna teach you on how to prepare a statement of financial position. So first, let us know what is the meaning of SFP or Statement of Financial Position. Statement of Financial Position is a financial statement that reports the assets, the liabilities, and the equity of a company on a given date. Components of Statement of Financial Position: the assets, the liabilities, and the equity. Assets. An asset is something that an entity owes or controls in order to derive economic benefits from its use. There are two types of assets: the current assets and the non-current assets. Current assets are those assets that are expected to be realized within 1 year from the reporting date. Non-current assets are assets which will deliver economic benefits to the entity over the long term. The meaning of liability is an obligation that a business owes to someone, and its settlement involves the transfer of cash or other resources. There are two types of liabilities: the current liabilities and the non-current liabilities. The current liabilities are those liabilities that are expected to be settled within 1 year from the reporting date. The non-current liabilities are the liability which will be settled over the long term. Lastly is the equity. The equity is what the business owes to the owners. So, this is the example on how to prepare a statement of financial position. First, all we need to do is to classify them according to where they belong, if it is assets, liabilities, or equity. So this is the statement of financial position of Roger Guitar Shop. At 31st January 2018 is as follows. Cash is 49,600, accounts receivable is 3,000, prepaid rent is 750, inventory 18,800, renovation and improvements 25,000, accumulated depreciation 500, accounts payable 19,000, long-term liabilities 24,500, accrued expenses 700, unearned income 9,000, retained earnings is 6,550, common stock is 50,000. So now this is the process on how to prepare a statement of financial position. First, let's start with the heading. The heading is the name of the company. The name of the company is Rogers Guitar Shop. Next is the statement of financial position. Next is the given date. The given date is January 31, 2018. Next is we have to classify them. The first is the current assets. The current assets in the given are cash, accounts receivable, prepaid rent, and inventory. The amount of cash cash is 49,600. Accounts receivable 3,000. Prepaid rent 750. Inventory 18,800. Next is we have to add them. $49,600 plus 3,000 plus 750 plus 18,800 is equal to 72,150. Next is the non-current assets. The given in the non-current assets are renovation and improvements and accumulated depreciation. The amount of renovation and improvements is 25,000. Accumulated depreciation 500. Next is we have to deduct the accumulated depreciation from the renovation and improvements, and the answer would be 24,500. Next is the total non-current assets. Next is the total assets. Add the non-current and the current assets. 72,150 plus 24,500 is equal to 96,650. Next is the liability. We have to classify them. First is the current liabilities. And the given in the current liabilities are accounts payable, accrued expenses, and unearned income. The amount of accounts payable is 19,000. Accrued expenses 700. Unearned income 9,000. Next is we have to add them. Total 19,000 plus 700 plus 9,000 is equal to 28,700. Next is the non-current liabilities. The given in the non-current liabilities are only long-term liabilities. And the amount of that is 24,500. Next is add the current liabilities and the non-current liabilities to come up our total liabilities. 28,700 plus 24,500 is equal to 53,200. Next is the owner's equity. The given in the owner's equity are retained earnings and common stock. Retained earnings and common stock. The amount of retained earnings is 6,550. The amount of common stock is 50,000. So, deduct the retained earnings from the common stock. And the answer is 43,450. So, this is our total owner's equity. The last thing we do is to add the total liabilities and the total owner's equity. $53,200 plus 43,450 is equal to 96,650. So as you can see, the assets is equal to the total liabilities and owner's equity. So therefore, our answer is balance. And that's the end of my video for today. Thank you for watching.